If you're concerned with a boom bust situation affecting housing market values, one thing you need to know is that the current U.S. housing price correction isn't a one size fits all. That's the word from our chief equity strategist and economist, John Blank, and he's here now with me to explain. John, the boom bust describes just a few markets, and many markets remain tight as of now, correct?
That's correct, Terry. I think the basic way you want to understand that is emanating out of California and the coastal tech boom and the tight real estate market here along the coast. People have created other boom bust scenarios by moving, arbitraging out their home prices in Phoenix, the Phoenix area, in the Salt Lake City area, in the Boise area, and the Austin, Texas area. And so these markets together are kind of in a boom bust. And they are correcting it price-wise with the rise to the 30-year fixed mortgage rate at 7%, and that should not be a surprise. What might be a surprise, though, is that really seems to be the extent of the deep declines at this point. It remains to be seen if it spreads out to the rest of the country. Certainly some of it is going to, but I don't think it's going to be as dramatic by any stretch of the imagination as 2006, 2008.
So with those areas in the boom bust that you just mentioned, what factors are in play in those boom bust areas?
Well, first of all, you've got a limited amount of inventories that's swiftly building up. People are trying to get out, particularly the flippers and the iBuyers, which are called iBuyers. They're trying to get out of these markets, so they're putting their inventory up fast. So yeah, that's the first end of speculation, which is actually good for a lot of reasons. Just like we're seeing a crypto bust in these boom bust areas that I spoke to, you're seeing a lot of inventory because the iBuyers and the flippers are getting out.
What then are the stabilizing factors currently for the tighter regions?
Well, the thing that basically you got to understand is, personally, the job market's strong. People have incomes, they're going to pay their mortgages. And the average mortgage rate, not the existing 7% mortgage rate, but the average mortgage rate that's out there on people's homes is half of that. 3.5% is the actual average mortgage rate in the United States. So if that's the case and people keep their jobs, those are the stabilizing factors.
So some of the published data can look a little daunting at first glance to the untrained eye. What's the best way to view this housing price correction?
Well, it's basically an affordability crisis, Terry. We've got a 40% decline in affordability, and that's going to drive down prices until it matches up with a better level of affordability.
You've written about insights on the topic from others who analyze this critically. Based on those insights, will we be looking at a housing market crash into the next year?
Correction is probably the right word. And, I think, for example, California Association of Real Estate, the CAR, is in for an 8.5% housing market correction across the state of California. I think that's a fair number at this point. And, really, though, it depends on what happens on the back end of this across the rest of the country. And we won't know that probably till much later this year. So my guess is, I looked in the Phoenix market, which is a really overheated market with a lot of selling. And at the end of the day, it was 6/10 of the population that's involved in the housing market there selling or buying. And that's just not enough to get a macroeconomic event going on.
What's your overall outlook then for the U.S. housing market going forward, especially with regard to interest rates?
Well, again, we're looking at, if you think a 7% mortgage rate's high now, you're probably looking at 8.5 as the peak in mortgage rates next year, early next year. And then it may or may not come down, and it won't come down much. It'll come back down to 7, I would think, or 6.5 at best. So whatever you're looking at in an affordability perspective, and these mortgage calculators don't put anything less than 6.5 in. And my outlook going forward is, not a lot of listings out there, and people in outside of those 5-6 areas of the R being out of the California market in the West, you're going to see, frankly, not as much price pressure as you think. A lot of people are just going to sit on their hands.
What's your forward view then on the U.S. GDP, and what role will that play in all of this?
My view on GDP, is the consensus, which we're going to do a 1% GDP growth rate next year and just kind of skate sideways. And what role will that play in this? That will not allow enough people to get fired to cause a crisis in housing. And also obviously was also not help the inflation rate coming down because we just don't have the unemployment rate to drive it. The crisis of people selling their homes in panic. So the good news is, this will keep the housing market under control. The bad news is it probably won't help on inflation.
Okay, you've been keeping an eye on a variety of large cap stocks lately, and a few of them include W.R. Berkley, Tenaris, and Zscaler. Hope I pronounced that right.
Yeah, these are names you probably do not know. W.R. Berkley is a large land of commercial lines of property casualty insurance, property casualty, and then also workers' comp and things like this. The insurers are actually getting a good bid here because they've got low unemployment rates and their portfolios, are probably going to end up doing decently well as a result of that. So W.R. Berkley, number one Zacks ranked stock with a B for growth. Got to like that stock. Tenaris, you probably don't know, ticker TS. Tenaris is actually organized in Luxembourg, and it's that's just probably a holding company. They are a leading manufacturer of seamless steel pipe. So this is an industrial play around the world, a number one ranked stock with a C for growth. Good value here. You got a forward P of 8 and a PEG ratio of 0.3. So you got to if you're looking for an international stock, Tenaris, ticker TS, is a nice one to look at. Zscaler is down to a Zacks number 2 rank, and it's got an A for growth. This is a name you probably do not know. So it started out in 2007 as Safe Channel, and then changed its name to Zscaler in 2008. It's one of the world's leading providers of cloud-based security solutions. So this is enterprise network security, web security, internet security, antivirus, vulnerability management, firewalls, that kind of stuff. So Zscaler's in this cybersecurity, Terry, to make it short point. And anything in this business is going to get an A for growth like this one because cybersecurity is such a big deal. The stock's pulling back a bit. Also, cybersecurity stocks like Zscaler should get a look. This is certainly one of them.
Chief equity strategist and economist John Blank on the housing market. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.